Alright, so in this video we're going to be going over I guess drawing market structure 2.0. So pretty much we're going to be going over your trend reversal patterns, being your double tops, double bottoms, head and shoulders, inverted head and shoulders, things of that nature. So with these structure patterns, you mainly want to look at them on H1 through H4 for your change in trend. Now, you can also see these structures obviously on the daily and the weekly, but normally when I see them on the daily and the weekly, I normally see them as double tops, double bottoms. Now, you can find these patterns throughout every single time frame. Keep that in mind, but you mainly want to look at them for H1 through H4. So pretty simple. All right, so let's just get started. So you're gonna have your double top. You're gonna have your head and shoulders. You also have your, let's put over here, double bottom. Let's move these over. All right, double top, double bottoms. Then you have your inverted. Now you do have your other patterns like the ascending wedge, descending wedge, but those aren't like main market structure patterns, I guess you could say. So I'll have a picture of those under the video along with the description. So pretty much for your double tops and your head and shoulder and your head and shoulders, you're gonna look for sell opportunities. Now you have to wait for the actual pattern to form. So normally a double top will look like this. Market hits the area resistance, comes back down, forms the neckline, comes back up, hits the area resistance, retesting it, and then initially breaking structure and starting a downtrend. So for this to be a valid double top pattern one, it has to respect the same area of resistance, right? So we're going to be getting into support resistance next video, but pretty much we have to get over identifying the actual trend, and we're going to be also getting on the chart in this video as well. So you have your double top, you have your head and shoulders, which it's as simple as here's a shoulder, here's a head, here's a shoulder. You're looking for sell opportunities. Now the only way you can actually take advantage of these setups are, one, when the market breaks past this point. This point being what? Saying that we're in on an uptrend for a double top to actually form. This is a higher high. There's a higher low. This is a high. And then this is a lower low. So are you going to sell when the market's forming a lower low? Obviously not. So you want to wait for the retest. Normally it retests the previous broken structure, being your higher low point. And then once it does that and it starts retracing back down, you enter your sell here, and then you continue on. Remember, your stop loss has to be way the fuck up here. So just keep that in mind, above market structure. So now, head and shoulders. So it's the same thing as last time. Overall uptrend. Here we have a higher high. Here we have a higher low. Here we have a higher high. Here we have a low. And here we have a lower high. Like I said, you have to break a higher low or a low point. Now, once the market's broken structure, wait for the retest. Once it retests, then you could enter your sell. It's as simple as that. So, yet again, you have to remember stop losses are up here. Or in this case, it would actually be in this lower high point above the right shoulder. But obviously, you're going to be using your fibs to measure your actual retracement levels and where you're going to pinpoint your stop loss. So keep that in mind. But you'll obviously learn fibs later on. Double bottoms. It's pretty much the same thing, except these are for buy opportunities. So we're in on a downtrend, hit an area of support, came back up, retested the area of support, forming a low, and then continuing on the uptrend. So like I said, this is a lower low, This is a lower high. This is a low. Here's your area of support, respected the same area of support, and then you have to wait for the break of structure being a higher high point. So here's a higher high, so wait for the higher low point. Obviously you're not going to buy on a higher high point, so essentially you're going to be buying on a higher low point, and you're going to be selling on a lower high. So it's as simple as that. Buy on a higher low, sell on a lower high. Okay, let's actually move this here. So obviously you're not going to buy here. You're going to wait for the retrace. Once it starts retracing and the retest is done, you can now enter your buy opportunity. Make sure stop losses are way down here. Now, but again, inverted head and shoulders is the same thing, it's just inverted. So left shoulder, head, right shoulder. So as you see, the neckline is right here. So we have to break this area of resistance. As you can see, there's also an area of support here. So initially we were in an overall downtrend, formed a lower low, then a lower high, then a lower low, then we formed a high, and then we formed a higher low, and then that's when the market breaks structure. Then wait for the retest, and then you can put your entry. It's as simple as that. A lot of the times these patterns don't look perfect. Like for the double tops, you'll see them like this, right? Or just make sure they don't look like this, right? That's an invalid double top because it's a higher high, there's a higher low, there's a higher high. So this is invalid. Keep that in mind. Invalid. This is valid because it respected the same area of support and actually formed a lower high instead of a high. So it's as simple as that. Now your double bottoms, a lot of double bottoms are like this. Obviously now that's invalid. Now there's a difference when there's tested candles and when there's broken candles. If you see broken candles, then it's invalid. If it's tested candles, then it's still valid. Right? You're going to be learning about tested and broken candles in the next video, which will be support and resistance. So inverted head and shoulders, a lot of the inverted head and shoulders you could take advantage of fairly easily, but it's a lot of them look like this. We formed a lower low, then a lower high, then a lower low, then a higher high, and then your higher low point, and then so forth. A lot of them do look like this, and actually this is valid. It's as long as this isn't the same area. But at this point, if you're looking at market structure, it could come all the way the fuck down here and then form a double top instead. So keep those things in mind. So yeah, pretty much inverted head and shoulders, because one, this is the break of structure right here, higher high. This is a lower high. This is a lower low. This is a lower low. And then this is a higher high. Then you form the higher low. And then that's when the market will continue on its upward momentum. Then head and shoulders. Normally head and shoulders look like head and shoulders. So shoulder, head, shoulder. So you can see that's still valid because this is still a lower high point. Even regardless, it has to pass this point to form a higher high. But normally the right shoulder, what I've noticed in head and shoulders, the right shoulder isn't much higher than the left shoulder. So just keep those things in mind. But that's pretty much it. Remember, obviously practice makes perfect. So every day, if you're on a whiteboard and you're drawing, market structure, just like this, every single day, and you're pinpointing your higher highs and your higher lows, then you're going to be getting really good at spotting these kind of fairly easily. So as you can see, here's a head and shoulders, here's a double bottom, as well as another head and shoulders right here, along with a double top as well. And oh yeah, by the way, a lot of the times I do see a double top within a head and shoulders, just like that. But Those are very these don't happen too often. I normally see these a lot in the smaller time frames. So just keep these things in mind. So let's delete this. And obviously, like I said, your only opportunities to buy and sell are right here. Buy at a higher low point and sell on a lower high point. So that's pretty much about it. Obviously, having a whiteboard will help you, and consistency is the best thing. So let's go back. I'm actually going to save this just in case. So now let's get on the actual chart. I just got to end this real quick. All right. One second. Okay. All right. So now identifying the trend. So I'm actually going to go on H4. I'm going to go somewhat back here. So as you can see, I don't know why my EMA didn't save. So first of all, we're going to activate our moving averages. Moving averages are extremely important, obviously. They tell you when there's more volume, depending if there's more bullish volume or there's more bearish volume in the market. So to simply add your moving averages, you're going to right click, insert indicator. You're going to add your, or you're simply going to type in here moving. You're going to add your moving average exponential, then your moving average. So since I already have them added, so your MA is going to be 18, length 18, style red, and then your EMA is going to be 8, and then style blue. So of course blue represents bullish and then red represents bearish. So whenever blue is over red, that means there's more buyers or buyer volume. There's more bullish volume. Whenever red is over blue, that means there's more seller volume. So that's why you use your moving averages kind of as confirmation to your trading plan. So like I said, you want a minimum of 3 confirmations before you even enter in on a trade. Now confirmations could list anywhere from market structure patterns to indicators such as ADX, RSI, and your estimated EMAs, so your moving averages. So now simply, as you can see over here, what do we have here? Here we have a shoulder, here we have a head, we have another shoulder, right? Obvious head and shoulders right there. Let me see if I can undo that. This looks ugly as fuck. So anyways, there's a head and shoulders pattern right here, but you're not able to take your first sell opportunity until the market breaks this area of support. Anyways, we can already establish that this is a higher high, this is a higher low, this is a higher high, this is a low, this is a lower high, then we formed a lower low. So wait for the retest. Like I said, once the market retested, so you could see retested the same area that it broke out of, you could then take advantage and place your sell opportunity right here after this bearish variation. Now obviously you want to pull out your fibs. You're not going to know what your fibs are until later on, and you want to just add confirmation. So right here I already have, I could see 3 confirmations, right? So we have 1 confirmation, head and shoulder. Confirmation number 2, we have a cross of our moving averages, right? Meaning that there's more sellers, more bearish volume. And then confirmation number 3, broken area of support. And then confirmation number 4, a lower low point was created on an overall uptrend. So now we've established that we're in on a downtrend. Why? Because this is a low, this is a lower high, and then this is a lower low. EMAs are crossed red over blue. So on an uptrend, EMAs are crossed blue over red the majority of the time. On a downtrend, EMAs are crossed red over blue the majority of the time. So as you can see, boom, I just got 3 confirmations right there for a sell, and I could have sold right here after this bearish variation and would have been in profit 81 pips in a day and 20 hours, mainly because of this nasty consolidation right here. So like I said, be taking a lot of notes in every single video. So it's as simple as that. Now let's go over here. So if you can see, here we have a lower high point. Once the market broke that, it retested right here on the lower time frames, most likely on the hour. So EMA's crossed blue over red, but it's not 100% verified that we're in on an uptrend until we break a real lower high point. As you can see right here, we have a lower low, then here we have our lower high point. So that's our true lower high points. You kind of want to block out any noise. This was a continuation, but this was also a break of structure here. So now the market started uptrending, blue over red EMAs the entire time. You know, you can also verify what trend you're in on the daily time frame. So as you can see, all throughout UJ, blue over red EMAs the entire time. Let me delete this. Blue over red EMAs the majority of the time. Now, as you can see, EMAs are coming down. We have extreme bearish momentum. So let's see what happens. But anyways, as you can see, now we're in a downtrend, red over blue the entire time. So, you know, if you're getting confused on the smaller time frames, just up it up a time frame to verify the actual trend that you're in. So now back to H4. Like I said, here was the break of structure right here. Here we have a lower high point, then we made a higher low point. This could also be an inverted head and shoulders, here being the head, shoulder, shoulder. But like I said, you could probably see a lot clearer on H1 because this is H4. Let me see. Yeah, here we have a head, shoulder, shoulder, along with another head, and then shoulder, shoulder. So it's an inverted head and shoulders right there. Like I said, it doesn't look 100% perfect every single time, but you can see it very clearly here. So you can see respected this area of support right here, as well as this area of resistance. So right there. So like I said, you can take opportunity of this once it's retested. So once it broke this area, already EMAs were crossed, showing that there's more bullish momentum. And then once it broke here, wait for the retest. So patience, like I said, patience is a big thing. Me personally, I wouldn't have put in a buy just because it broke this area of resistance. But, you know, I did catch this move here. You know, with obviously time and patience and knowledge, you will be able to catch moves a lot earlier than you would before. So now for the retest, as you can see, wait for EMAs to cross blue over red, and you know, there's a lot of things that come into play. But as far as I'm concerned, we're just looking for patterns, and we're trying to verify the trend that we're currently in. So now it's pretty much as simple as that. So keep in mind, when blue is over red, the majority of the time you're in on an uptrend. When red is over blue, the majority of the time you're in on a downtrend. I'm talking about your moving averages. Also keep in mind that you need to pinpoint your lower lows, lower highs, and you need to verify that you're in on a downtrend with your lower lows and lower highs, and your EMAs basically just help you verify that. Then obviously higher highs, higher lows are on an uptrend, along with a cross of blue over red EMAs. So that was fairly simple, this video. Next video we're going to be talking about support resistance. So pretty much what I have on the screen, all these random lines. So we're going to be getting into our biggest form of support and resistance, which is on the monthly time frame in the next video. So that was about it, and I'll see you guys then. Make sure you take a lot of notes, because support resistance is the foundation of my trading style.